Hello, and welcome to the Commonwealth November Market Update. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. If I remember correctly, at the end of last month's market update, I said something to the effect of, we're probably going to see some volatility. I was right. We saw a lot of volatility. U.S. markets dropped by over 5% in the middle of the month. Why was that? It was a scary time. We had to worry about Ebola. We got very bad economic news out of Europe. We got very worrying real estate market news out of China. Even the U.S. economic figures were coming in a little bit slower than we would have been comfortable with. And markets reacted and they dropped. But then an interesting thing happened. The markets recovered and they recovered strongly. In fact, we ended the month with a gain. What's going on here? Why the drop and why the recovery? First, the drop. There are real problems out there, particularly in Europe and China, and there are things to worry about. But the reality is the fundamentals of the recovering U.S. economy are actually quite strong. And that really came through during the month as the data releases came out. We saw at the end of the month that the economy actually grew 3.5% last quarter. That's quite strong. That beat expectations significantly. And that says that, yes, things are getting better. The Fed actually ratified this by voting to end their bond buying program. The Fed has been very, very cautious. And for them to step back is a signal that, yes, indeed, things are getting better. But it's not just the overall statistics that are getting better. If you look at employment, we added 248,000 jobs in September. That's really good. And it's another in a sequence of very good reports. We've got job openings at a 13-year high. We've got job layoffs at a 14-year low. The employment market is actually doing really, really well, and it's likely to continue to do so. In fact, if you look at the economy and how that translates into corporate performance, you see exactly the same thing, and this also helped the markets. As of the end of October, over 3/4 of companies were beating earnings expectations. Almost 60% of companies were beating on revenues as well. Corporate America is actually doing quite well, and unlike earlier in the cycle, it's because the average person is doing better. The one missing piece, wage growth, we saw a data point come out the second quarter in a row that says, yes, wage growth is happening and it's likely to step up. That was the missing piece. It says that the economy is going to continue to improve. That's not the end of the good news either. We've actually seen the oil price drop substantially. This is a big deal because oil translates into everything we do. Gas prices drop, which means consumers can spend more. Energy prices drop for businesses, which is huge. This alone could add another 0.3% to the growth we're seeing if it continues, which in my opinion, it's very likely to do. In fact, we just saw another tick down the morning before I recorded this. So let's recap here. First of all, employment is doing very well and it's likely to get better. In fact, consumers will probably make more money going forward. Second of all, oil is going to support the economy. And third of all, companies are actually taking all of this and using it to make money. What does this mean? This means the market is likely to be supported, and while we'll certainly see more turbulence, it means that the fundamentals actually are in a very good place. Thanks very much, and I'll talk to you next month.